Well, thanks for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Here it is Thursday, and a couple of things going on today. Well, we have USDA's set of WASDE reports that'll be coming out. They'll be coming out with their South American production estimates at midday, and also the wheat production estimates for the first time this year in the U.S. And we, this morning already, got our weekly export sales numbers. We can take a look at those. You might be surprised. I hope you're sitting down. Let's take a look at what we had this past week. For corn, remember how we've been running very strong, way over 1 million tons for several weeks? Well, check this one out. 239,300 tons is all we sold last week of U.S. corn. Not even 250,000. Soybeans, 221,000 tons is all we sold last week. Soy meal, 198,000 tons. Gosh, we almost sold as much meal as we did the soybeans themselves. Soy oil, 600 tons, question mark. Wheat, 138,400 tons. Nothing was stellar there. Let's take a look at the rest of them. Let's go to grain sorghum and cotton and rice as well. So on grain sorghum, we had total sales 27,800 tons. Well, that was down 69%. Let's look at the cotton. We had only 118,100 running bales of cotton sold last week. Well, my goodness, for the old crop portion, that was a marketing year low too. And on the rice, we had 31,200 tons, and that was actually a little higher than last week. So it looks like out of all of them, about the only thing that really gets a gold star might be the rice sales last week. Okay, so to add to that, we did actually finally this morning get an overnight export sale. And I was a little bit surprised to even see that one come trickling in late, but we did have a sale of corn to China apparently yesterday, 612,000 tons. That was a pretty significant sale right there. And one has to wonder what this is all going to have to do with our markets here today, especially with the WASDE numbers coming out a little later on. So to examine this situation, let's go to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Those weekly export sales, man, that was, I had to check 2 or 3 times. That didn't seem like it was right when I saw that first printout this morning. Did you get caught off guard a little bit?
Well, we expected they'd be a little disappointing, Marlon, because we didn't have any private sales last week, but really not this much of a disappointment. Now, let's look at some positives here. As far as wheat and soybean sales go this morning, we're still on pace, even with these poor sales today, to meet the USDA forecast. So later today, when the USDA updates their export projections, we really don't look for much in the way of corn adjustments, wheat adjustments, but soybeans could be adjusted higher because we have about 4 months in the marketing year left, and we've already reached the USDA forecast. So they really need to adjust those higher. So even though these were disappointing sales today, in fact, they were marketing year low for corn, for wheat, and for soybeans. The soybean number is in line with what the USDA is projecting already, so it's not just a complete washout. The wheat number, we only have a couple weeks of this marketing year left, and it's right in line with what the USDA is projecting, so we don't really think we'll see any adjustments today. So those numbers aren't a real disaster. There was a private sale announcement that was kind of a surprise to the trade. Usually these are kind of leaked or rumored prior to these sales coming out, and I haven't heard anything about this sale, so it's kind of a surprise. Most of it was for the new crop marketing year. I think just one cargo for this old crop year. Most of it is for that new marketing year, and we've had a very close to record pace for the new marketing year for corn and soybean exports. So it's good to see that those numbers continue to push higher. But as far as influence on today's trade, we may have a little bit this morning, but most of the trade is watching what's going to happen at 11 o'clock and then start watching weather once again closely after that.
So to that end, I was a little surprised and caught off guard yesterday when we had the market rally ahead of the reports. And they rallied quite a bit on the grain side. Let's look at what we did overnight. Did they adjust for that or not? Well, you be the judge. Let's look at corn. July was down 1 1/4 penny this morning on the Globex close. It was at 7.87 1/4 per bushel. That was a good 5 cents off of its overnight high. December was 2 cents higher, though, at 7.37 3/4. And by the way, these would have closed before that overnight export sale was announced. Soybean trade, we had the July down 13 cents overnight. We were at 15.93 3/4. And also on the November new crop, we were down 13 cents overnight. Checking out our wheat, we had July Chicago down 3.5 cents at 11.09 in the Kansas City market. We had that July contract going down by 3 3/4 cents at 11.96 3/4. And in Minneapolis spring wheat last night, we had July finishing 3 3/4 lower at 12.52 1/4. Well, I want to take a break right here, and when we come back, Brian, we had all these grain export sales numbers, or lack thereof, here a little bit ago. We'll take a look at what we had for meat exports last week, see if they're any different when we come back. We're talking with Brian Hoops. Let's see what we had for beef and pork exports. Let's bring up those totals, and USDA just came out with them here a few moments ago. Okay, on the beef side, 28,400 tons. Brian, I believe that was a marketing year high. That was sharply higher than what we had the week before. And we had pork sales, 26,300 tons this past week. That was up a little bit too, up about 10% from the week before. Interesting side note here, China did not buy any U.S. beef this week. They've been buying beef quite a bit here lately, but not this week. And this time they bought some pork, 4,700 tons. They've been absent from the pork market for quite a while. So they kind of flipped the game plan here a little bit.
It certainly appears that way. You know, it's very encouraging to see the beef sale marking their high this morning. You know, the packers are kind of tipping their hand from the standpoint that we're killing a lot of cattle on a weekly basis. Our slaughter this week expected to be even larger than last week's big slaughter pace, and that's a good sign that the packers have enough demand to go with these increased slaughter numbers, because our weights are higher than a year ago, and if we're killing more numbers of cattle, it's got to be a sign that there's good demand, and I think that's showing up on our export sales this morning. The pork number, now the sales were not a marking year high, but the shipments actually were, so that's a positive as well, that we're not only making these sales, but we're shipping these out. Shipments are probably even more important than the sales. That means the country's actually accepting shipments, and so the pork number was good. Hopefully, we can catch a bid off of this news and see a rally in both the beef and the pork sector today.
So I want to bring up the Livestock Summary from yesterday and ask you about this here a little bit. I saw that we had some cash cattle trade out in the plains, and it looks like the sales activity was basically, I believe it was 137 to 143. There it is. So fairly wide range. But I don't know if the movement was all that heavy, and I guess I'm going to call it steady with what we had before. And the same story goes for the dress basis sales, a range of 227 to 230. All in all, maybe steady, maybe $0.50 under what we had the week before. But what does that tell you here? Because back on the cash cattle trade on a live basis there, I mean, we're still several dollars over where the nearby futures are.
Yeah, exactly. I think you have to call yesterday's trade just kind of a cleanup type trade. Mostly at steady money, a little bit higher, a little bit lower, but overall it's steady with the previous week. And we've been steady for virtually 5 weeks in a row now. So we did see a rally in the cattle market in the front month yesterday. There's just not many willing sellers at June cattle in the 132, 133 range when cash is 140. Now, if we can extend the rally up into the 136, 7, 8 area the next couple sessions, you're probably going to run into some more selling or more hedging because of the concerns about the consumer demand, the high inflation that we've seen, the overall struggling economy, and certainly summer hedges are certainly going to be justified.
They did narrow up the spreads yesterday, and June live cattle were up $1.17 at 133.57 on the close. Feeders closed $1.85 lower on the August yesterday at 170, and then we had the lean hogs finishing the session with June 72 lower at $100.85. Brian, thanks for helping us navigate the waters here on what's going to be a very busy Thursday. Appreciate it. Brian Hoops, Midwest Market Solutions. Janet, could be a big day.